You already knowing what it is. Come on down and get them Hollywood trades. One more time. We are back with NASDAQ, and we got to go to the higher time frame on this one. We got a lot of people wondering what's going on, this and that, Trump, taxes, tariffs. Yes, that did accelerate this candle, but on higher time frame candles, when a higher time frame candle has a goal, it is going to do it really quickly, regardless, or you want it to happen really quickly, because the last thing that they wanted this year was this, that it would hit this high, because we weren't going to sustain over this high. We already got a break and retest. We got another break and retest and another break and retest. All this is break and retest that's never been retested, right? So you can't just let it go for a whole nother year, because then if next year would have been a bullish candle, imagine if we would have did this, but after another candle, right? We would have had to come back down to this retest point. We would have had to come all the way. That's technicals. They ain't got nothing to do with tariffs. So with that being said, now you can understand, like, this had to happen, and I knew this had to happen. I'm getting good enough at price action to understand, when you get a white bar, you want a black bar or a green bar and a red bar. You want those back to back. So they had two. They had one. This was a freebie because it's not breaking. This was a free last year. The year 2023 was a free green candle after so-called COVID sell-off, which was not. It was all technicals. This had to be revisited. This line and this blue line is here for a reason. It's the halfway point between there, and that is the stretch between this candle and this candle, and the imbalance in between. All the bulk of the orders are going to be at the mean threshold of that space. That's just how it works. And so all of this is technical for people who don't understand a break and retest, or where a retest should happen at. It should be, any buy should happen below this low and above this high in this imbalance zone. That's just how it works. And so boom, a technical, and then boom, we had another freebie technical rally back above this high. Now this is support. This is support. This literal, this level, literal, this level, literally this level are all the support. So anything under these would be dramatically, especially on a higher time frame, would be a dramatic support zone. A lot of buying underneath these levels. That's institutional buys would exist underneath this level. This is the last identifiable level of support that the computers and the technical analysts at these hedge funds would buy underneath these levels. These are the only levels that exist here. Only candle levels exist. Those are the only levels that exist, time-based candle levels. So they had to use this level as the lowest support level, and they buy below it, right? Easy longs last year because they had that super support. There was no reason for them to not catch that full deviation. This year, we souped the high, or I should say swept the high. I'm not even going to put a market on it. It's the yearly. We swept the high, and what do you expect? A purge of the high. After that, you expect the retest. That's just what you expect. And so right now we're spending time on this yearly chart, and it makes it make sense. It will make, all of this will make sense. Now, what happens next at these levels is what, any of the buys, you would really want any of the buys to happen below this yearly candle to get a sustained, like, going for years and years and years up after this year's candle, which this year's candle is probably not even going to be a bearish candle, because they're getting it out of the way before the middle point of the time range. The time range is 6 months. So they're getting all of this out of the way before, they're getting the manipulation out of the way before they can actually go into the pull. So this wick should probably, this should be like really like a small bodied either white, or a small bodied black, or even a bullish body. And then after that, we should rally, right? So, once they do all this, this can turn, once they snatch this, if they need to, or just mitigate this and this, or one of these levels here, here, or here is going to be the buying point. So this is all technicals. They know where their buys are at. They knew since last year. They knew since this candle where the rest of their buys were going to be at. They knew since the exchange of this happened at the end of 2023, the beginning of 2024, they knew that their buy zone was going to be in this range. I have this marked for a reason. I only have one markup on this chart plus this. You don't need that many markups on the higher time frame. So now let's go down. Let's try to make this quick. I'm going to go down to the 3 month. Let's go down to the quarterly chart. Here's where the magic happens at. We reached our deviation of this to this. This was our deviation. Anything above that was a bonus, a good bonus indeed. And then, right, you have this candle level. If we do fall back within this range, this candle level is going to be the first target for sure. This and this were going to be the first target for your shorts. That all happened in the first quarter. And then, of course, we have the next quarter just opened up. And we see this, the whole basic range of this quarter's body was covered in a few days. So we know we're headed for a manipulation here. We know this is for sure. They took all time-based opportunity to go ahead and get these lows out the way. Of course, that low, once we went up, that was the first target. And this was the second target, and we just hit that right here. Of course, on NQ and all the other randomized charts you can get, the futures are going to be a lot more accurate, as you would say, intraday. But as far as time-based charts go, the higher time frames are going to be very much similar. And you can even say if there is a low that exists on the other ones, that they'll all be hit, that if they haven't been hit yet. And that's just basically the basic synopsis of that. So this is the previous year's high. Again, this candle right here. Your buys are going to be below this. It's going to be below the breakpoint. This is the breakpoint. This was the yearly breakpoint. So all your buys are going to exist there. And then you have the 50% retracement, which is its own level by itself besides all these. So all the lows above 50% are grass. On a retracement, if you get a close below the highest candle on a retracement, anything to the 50% is your target. Easy targets too. Easy target. This one, only reason I would say it's easy target is because it has an imbalance, and I can't imagine that it wouldn't want to go for this imbalance right now on this run. So we want to, and once we clear this imbalance, if we start getting support right here and then we get a bullish close, this is going to be a juicy high. This high right here is going to be super sweet. And so with that being said, you can see what they're going for. This is just a fib retracement. Hopefully they don't go for a full fib retracement. This is just technical. They can do this full fib retracement here, come down. I'm not even going to draw this imbalance here, but there's obvious imbalance here. Of course, below these lows to this high right here, there's an imbalance. They could easily come down to that imbalance within justifiable technicals, not even news. So just imagine if we got 2 more quarters, of course, going into the end of the year and we're coming down here. Like it all makes technical sense. And then fib, this would be the best form of a buy, because the buy, if they could mount, bar things going into a tailspin uncontrollable, but they got it under control very much at this point. They know exactly what to do. So they'll know exactly what to do here, whether it be rates or whether it be this news or that news. They'll know what to do here to make it come. And that's just, imagine that if they can sweeten the buy up, right? So you got to think like these folks, right? They don't care. They don't care nothing about it dropping. They're going to make money on the way down, and they're going to make money on the way back up. So the further down they drop it, the more money they're going to make back up to the all-time high, plus the deviation. So you create a bigger deviation so you can stretch it up further as well. It's a slingshot, a trampoline, rubber band. So with that being said, we'll go down to the monthly, because this is, I feel like, we're at 9 minutes so far. This is a mandatory deep dive at this point, because a lot of people they're just like, oh, the chart is doing whatever. It's not doing whatever. This whole wick right here, this created this target. This target was created when this got created. When this candle was created, this target was created. So what? Of course, when you catch the bearish movement, they're like, oh, free target, possibly free target right here at the yearly exchange. You see, it did a break, and then it did a retest right here. And then, of course, you know what I mean? It already did a partial mitigation of that. So even if it sweeps this low, we'll have to see. This is the controlling low from low This is our low to high. So this would be a full Fibonacci measurement. With that being said, when you get down to what you would call the fib low, this would be a fib low, and then from this to the high is another fib low. And when you get to these Fibonacci lows, below that is potential for a pure monetary exchange, right? Where they just fully exchange. You'll see the wick, you might see another wick here, and then just a full monetary exchange rebound. The height is going to be the target. So you're going to see some real, underneath wherever their target is, you're going to see some real bullish candles, because the target, there was no white candles yet in this range on the monthly, right? To stop the rally. When you're looking at it on the higher time frame, of course, when you're looking at the lower time frame, you'll see a lot of only one on the weekly. So this one on the weekly is gonna be the first stopping point, I would say. If we go lower, sweep here, get a bullish close, and then that's going to be our first stopping point, is this candle here. It's going to slow us down a little bit, give us a little pullback on the weekly, and then we should be able to attack the rest of this imbalance, hit this bar. This bar is going to give us some resistance as well. We can expect a consolidation here before we actually get to the high, but you're going to see some real strong bullish candles start popping up the same way you see these bearish candles. You're going to see some real strong, because the only resistance is your opposing array. So this was a bullish candle. That's going to be our only resistance coming up as those orders that were stuck in there begin to mitigate, right? I had this here for obvious reasons. Anybody who's seen my YouTube idea update from, I forgot when it was, but when right after this was like rallying, I believe I put this here because this is a flat bottom. That kind of let us know that inefficiency there plus this inefficiency, and this is what I was talking about in that update, is indicative of future targeting. Like both of these together, of course this alone or this alone, but both of these together really let us know. And this is an unswept point. That's why the X is there. It's unswept. It's not clean. And that's what I said in that this was not clean. They want to clean up. Whenever you get a rally point, you want to eventually clean it up, or clean it up like this right here. Like this low got swept again, this low got swept again, and then it rallied, right? But eventually you want to clean all that up. So with that being said, you see that all this is technicals. Like this was put here already. Now you can say that they did manipulate it when they did this. They have tricks where they can, or they'll spot a manipulation. I won't say they have tricks where they create a manipulation, but a manipulation can happen. And if they say, let's just keep going, they'll keep going, and then they'll hit that high, and then they'll do some stuff, clean all this up, like boom, get that, come down, clean it up, and then drop, right? So this is all clean right here. So it was allowed to just drop straight to our sell side targets. And then of course we had another sell side target gain today. It doesn't seem like that was where any of the longs were sitting, because if longs were sitting here, we would have seen a really nice rally today. We would have seen it would have been super nice if they collected enough. So I think they're definitely heading for this low. And this was all my speculation. Once we got the closes, the bearish close below this one, and I put that there, then that was my speculation. I did speculate that they were going to get a better rally off of this point, because I actually did get stuck in a long, lost a couple $100 right here, because I thought they were going to clear the rest of this. They just left it just by enough. I thought they were going to clear this, and I was actually aiming somewhere like nothing crazy, like actually at these break and retests, because you guys know I love those retest points on those candles. And I was going for this retest points that broke, and it just snatched our socks all at once. And it was after the net, after it continued, of course, we knew we were back short, and we knew we were, heading for all of these now. But that was definitely a doozy when they cut us short right there. I will admit, when I, it was a clean understanding. All the understanding is always the same. Everything that I'll ever put in an analysis array wise, level wise, zone wise, always going to be the same. So my expectation was that, of course, it was going to clear this, but that's always a danger zone, right? Especially when you start getting up in the upper 50% of these imbalances. You can, if you see any bearish activity above this, you don't want to see any bearish blocks get created from above the 50% of an imbalance on the lower time frame, because once that happens, they're basically going to target where it came from. So this became the first target. It didn't reach it last week. It came up this week, mitigated this because it closed under this. So between this and this was the retracement zone. It's a small candle, so the retracement zone is usually going to be the whole candle on a small white candle. On a larger white candle, it'll be between the wick and the mid body, usually on a longer white candle when you break it down below it and then come back into it. But pretty much, that's pretty much that. I mean, we don't, there's no point to even come to the daily. We see where it's going. So yeah, that's pretty much, you see where it's going. Once you look at the higher time frame, it's like, there ain't really too much analysis to do on the daily. Once you get to that point, you understand where we're going, and that's why it's almost there. So it's just clear, right? That's why it's going so much faster now. It's clear where it's going. They always knew it was going to come here. It didn't have anything to do with Trump. Is reveling in his relevance, his irrelevant relevance. That's pretty much that. I do need some markups that I need to make, but I don't really even know. Let me just clean some of this up. Maybe I can. And this was untested, so we know this is a future target, right? When you ever get a candle that's broken like that hasn't got, we know this is a future target. So we know when we get that bullish order block, we're definitely coming here and most likely going to come here and kill all of this as well on the way to the height. It's going to be very easy because this is just very lax of structure. So all of these highs are just going to be easy targets. This is how we know ahead of time. Like, people are going to be like, when it gets bullish, they're going to be like, oh my God, it's going so bullish. This is crazy. But no, we already know where it's going. So like, when you kind of know the up move and what it left behind, then when you get the down move, you're kind of prepared. So this is how you become prepared in these ways for different shifts and cycles. That's pretty much it. I mean, we can go to that. I've been breaking down a lot of the intraday in the actual mines on the US 100 NAS 100 chart. I mean, this is just, once it starts doing like this, it's just imbalance range after imbalance range after imbalance range, basically. I mean, that's pretty much, when you're booking towards the target, that's pretty much all you're going to get is just imbalance range. Clear the imbalance, hit the block, boom, come back, make an imbalance. Don't even clear this imbalance because it's too large, and the drop was too much to even get back to this point. We probably would have gotten back to this point if there was a bearish order block here that got traded above and then respected. It would have sent us algorithmically or robotically back into this level here. Maybe not even a full clearing, because if it was this bearish, then a bullish order block would have only gotten us to around here, and then we would have suffered the same fate, because they have a target, right? And all of these ups and downs aren't scheduled. They're not like fully robotic to a T, because they allow for a room of margin of nuance. Like, if this was a black candle on the hourly and it traded above it, it would have used it a little bit more as support, and this would have been a little more of a consolidation range, and the drop would have been a lot sharper, and this and that, for whatever reason, however much control they do have of all of this stuff, this is how it just played out. And we see we're getting really wicky, so we're kind of getting into the bullish zone, right? We're getting, all the wicks are kind of covering the bodies. There's no imbalances here. They're at fair value here. They're establishing fair value. This is a fair value gap, but right here they're establishing fair value. So it will be able to come right up back to these ranges here. Once we establish a bullish flow, because this is all fair value, it'll either act as a really sharp resistance for further downside because it's fair value. It doesn't need to come for an imbalance correction in this zone.